my favorite brains on the Middle East. So nice to have you on this panel and to hear your thoughts. Let me start again with the overnight news, and let me start actually with you, Alia. Overnight, we heard the news that there's US intelligence that Israel might be preparing for a potential strike on Iran's nuclear facilities. I think you, among other people, have been looking at this for the past 18 months. And I think one thing we've noticed over the past 18 months is there's decoupling between the geopolitical escalation in the Middle East and oil prices.
Absolutely.
Do you see that continuing, even if that terrorist turned out to be true?
No, absolutely. I think, first, thank you for inviting me. I think markets, and both on the oil prices side, but also on fixed income where I work, have been too complacent in underestimating the potential risk from a geopolitical escalation in the Middle East. And I think this is also partly explained by the fact that the efforts, both regionally by the leadership in the Gulf, but also by Europe and the US, have been to try to avoid such an escalation. But as the news cripples in, I think we are likely to see a reversal potentially in sentiment towards that. One, because a geopolitical escalation means that the whole business environment for the region will become uninvestable, at least in the short term. Even if these strikes could be targeted, the spillovers on the rest of the region and on risk perception will be, I would say, quite damaging. Having said that, I think the upside from a non-escalation is also a transformational for the region. Both in terms of the ability of the leadership to pursue these transformation plans that are necessary to diversify away from oil and gas, to pursue peace and stability in the Levant, to ensure that North Africa also continues its recovery, and also to deploy more capital both in the region and also have more integration within the region, which has been lacking. So I think it is a binary bet. I tend to be on the optimistic side because I do believe in the capacity of leverage of this region, as we have seen it over the last week or so, but also, which is only a culmination of previous effort, to work to put in front the geo-economic interest of the West, of China, but also in particular for the US in the next period.
Thank you. Dr. Mahmoud, do you agree that with Alia's downside scenario that markets might be understating the risk, the geopolitical risk from the region? Or do you see the decoupling between geopolitical risks and, for example, oil prices to continue?
Right. Well, let me join Alia in thanking the opportunity for being here. And well, I think there are some exaggerations of the use of terms. Is MENA a region to start with? Is it adequately integrated by trade, by investment, by mobility of people? Or we are talking about different sub-regions. GCC, you can add in some aspects as well on the economic performance, Jordan and Morocco. Then there are the other countries, including the countries with bigger demographics. So they would act differently to these kind of changes. And the influence of the changes on some major exports, including oil. Having said that, if such escalations that could really harm the security in our neighborhood further, there are two things. If it doesn't happen, without confirmation that it will not happen, it's decision-making under uncertainty. If it happens, hopes for peace aside, it's a major disruption that we need to be prepared for. So there are two ways for government officials to deal with this matter. You say, well, I'm acting nicely, I'm putting all of the efforts I can, and then there are all of these shocks coming, disrupting the peace and the macroeconomy. And this is, I think, for the lazy policymakers. Those who really know that this is a world of perma-crisis, that there are some anticipated risks, including the one that we started with, and there are unanticipated risks, so we need really to do the wise thing by being more prepared than what we are. Diversification comes really, as Alia mentioned, in, as one of the options. Embarking on digitalization is another. And dealing with issues related to deregulation is the third. And actually, those 3Ds were mentioned by the managing director of the IMF when she was at the government summit in Dubai in February. But I think she missed two more important things. How to pay more attention to the demographics in the region. This is in that particular aspect to our region because we have this kind of good demographic dividend that we're not capitalizing on adequately, with few exceptions when we take care of investment of human capital. And the other thing, including actually the attempts by Bloomberg and others, we are very much shooting in the dark. The kind of quality of data that is available for investors, exporters, and decision-making is leaving a lot to be desired. So those 5Ds could really frame a kind of a framework to deal with anticipated and unanticipated shocks.
So 5Ds instead of 3Ds.
Yes, exactly. I'm more biased to the ones that are not mentioned by the managing director of the IMF.
Can I ask you about a 6D?
Yeah, go ahead.
I posed it as a question, the role of the dollar in the global economy and its dominance. You've written a few articles on the dollar, the 6D. Where do you think the dollar is heading? Is it going to remain the world's global most dominant currency? Or have sanctions on Russia after the Ukraine war, the trade war, what is happening with the US fiscal policy in terms of debt and deficit numbers, do you think that another currency will basically dethrone the US dollar?
Yeah. In the future of hard currencies, it's easier to talk about history and trends. If you want to talk about present and near future, you shouldn't be wasting any minute discussing it. You'll be making money somewhere else. But anyways, and I'm not making money here. So the issue here, looking into the history, and Daoud and others had these kind of nice charts about the fate of the guilder, the fate of the pound sterling. And I would really say what keeps the dollar where it is today, despite everything, quoting Iswar Prasad, one of the gurus of the international currencies, in his book on future of currency. They say, well, the US has been doing every wrong thing, but matters are relative, that there are others who are doing worse. So relativity saved the dollar for now. But it has been in the decline since 2000, 71% of international reserves. Now it's less than 60%. The alternative is the euro, doing 20%, and primarily within the eurozone is being used. Very little use outside the eurozone of the euro. They are trying to take the opportunity, rightly so, to internationalize it further. Good luck with that. But then you have the competition coming, not necessarily from the yuan, because yuan is still 3-5% so far, but actually from the Canadian dollar, from the Australian dollar, and pound sterling a little bit, and then the Swiss franc. Then I would really go to two other things. It's not just relativity. There is the other thing that Janet Yellen, the former secretary of the Treasury, mentioned, which has been confirmed in a nice piece by the Federal Reserve. It's basically the fundamentals. Deeper market, liquidity, variety of assets, rule of law, and predictability. We have seen those five being challenged during the last few months. So you would really watch how accelerated will be this kind of challenges to the dollar if the alternatives, be them cryptos in some informal activities or actually formal sometimes, and I know there will be some discussions on the cryptos as the digital dollar will be discussed at some stage. And then the other thing is basic about the role of gold, and we have seen accumulation of gold by international reserves. Then the final thing, in addition to relativity and the fundamentals, as mentioned, there is the issue that President Lula of Brazil has been emphasizing, that we grow up accustomed to the availability of the dollar. But you normally are accustomed to something unless something disrupts it negatively or positively by the challenge. So actually, we shouldn't really be taking it for granted. And international reserves managers should be more watchful. And the history of the sterling in the past, the guilder in the past, are very useful for the future.
History is all we have to predict the future. Ali, I want to come back to you before coming to Faisal. I don't want to ask you what your client, which countries your clients are asking you about, because usually that means trouble. So let me start with the optimistic note. Where do you see the bright spots in the region?
Well, I think within this uncertain environment, I think we are looking at a framework where we're looking at three issues. Policy intentions, how countries are facing these uncertain times, ability to adjust, and how really market is reacting to that. And within that, we think that those policy intentions have been clearer in countries like Morocco, which is forging ahead with its diversification agenda from a investment-led growth to a private sector, public investment-led growth to a private investment-led growth, will benefit from lower oil massively. So that's a really bright spot. We also look favorably at the policy intention we heard yesterday from the Saudi authorities that they are able to adjust, although their ability to adjust on the spending side is much more limited than before because of their plans in the future. But let's see if on the revenue side we will see, and market will be looking at how much they will change their borrowing plan. We also think...
So revenue means borrowing or means
the
taxes?
The new borrowing, because last week, in the original budget, Saudi has put a given amount of borrowing for this year, but which was based on a much higher probably oil price. And now, after issuing around $17 billion since the beginning of the year, there may be a new borrowing plan that actually puts in the market, at least from the sovereign, another 10 to 12 billion, let alone the rest of the complex. So this is where markets will react. But another bright spot is also in the region is Oman. And I'm sure my colleague will talk about it, which has delevered significantly and is now much more able to face the shock. However, Bahrain has still high level of debt to GDP at 120%. Egypt could be a bright spot if structural reforms accelerate in order to lift growth, because dealing with that in Egypt is going to be a difficult task. And I think Lebanon is at a fork in time because it's a combination of effort to state building through disarmament of Hezbollah, but also restructuring and reform, which a powerful, basically, stakeholder are going to be against it.
So we'll talk about Bahrain, we'll talk about Egypt, we'll talk about Lebanon. But let me just talk about the bright spots first. And Oman is a bright spot, Faisal. Two questions here. One, what did Oman do to become a bright spot since 2020? And second, does that mean when the next oil downturn happens, it's going to be less painful to Oman than the previous one in 2014 to 2020?
Thank you, Ziad. And let me please join my colleagues as well in thanking you and thanking Bloomberg for this wonderful opportunity. So, absolutely, Oman is definitely a bright spot. Over the past 5 years, Oman has embarked on a phenomenal fiscal development program, where you had in 2020 quite a high debt to GDP of around 67%, I believe. This has reduced over the last 5 years to around 30 to 35%. And so the reforms and the amount of programs and work that has gone into reducing the debt to GDP is phenomenal. The fiscal deficit as well has reduced markedly. There's a number of policies that has been basically worked on and issued by the government, specifically on things to attract investment. FDI has increased into Oman, I believe now reaching quite a high level of around 30 or so billion US dollars. So we have a green hydrogen sector at the moment that Oman is very proud about, where there's around 50,000 square kilometers of the country has been earmarked for green hydrogen projects. That's around 1/6 of the total mass. And this just goes to show how Oman is committed to renewable energies, to diversifying its economy. And I think this is a good segue to your second question, Ziad, about what happens when the oil price reduces. You will find that over the past 10 or so years, Oman has embarked on this diversification policy to try and diversify away from oil. Oil and gas, as you know, not just for Oman, but it's one of the main, if not the main, export for the GCC. And we're trying really quite hard to diversify away. So we've done a number of things. We've tried our best as well to focus on investing in our people, to ensure that we have to develop a service-based economy that we've got as well in Oman. And it's very important, I believe, that when we're hedging against those risks, education is such an important sector as well to work on. So I think there's definitely a bright spot, as you mentioned. Oman is doing a lot in this respect, and I think those efforts will come to fruition within the short term.
Yes. I think, Oman has done a few things, but obviously, let's also remember that when 2014 happened, Oman's debt to GDP ratio was 4% of GDP, and that went up to 67. So, yes, there's deleveraging now, but it was delevered back then. Right. You mentioned diversification. Let me just ask you another question on this. Because it feels to me that everyone in the GCC, and even beyond, even in Iraq, everyone's talking about diversification. And if you look at the GCC, and you ask the countries, what sectors do you want to diversify into? They mention the same sectors. They mention tourism, they mention financial services, they mention logistics, petrochemicals to move up the hydrocarbon value chain, and recently it's artificial intelligence. It used to be called knowledge-based economies, and now became big data, and now artificial intelligence. And my question is the region crowding out itself? Do we really need multiple financial centers in the region? Do we really need multiple megaports and airports in a small geography with the same time zone? Is there crowding out here? And can Oman basically stand out in this?
I think that's a great question, and there may be an impression, and I would categorically say that there is no crowding out. So there is absolutely no crowding out, and I'll explain why. I feel that the Gulf, if we're talking about the Gulf here, the Gulf economies are very complementary to each other. If we talk about logistics, for example, Oman is the only country within the GCC that's overlooking the Indian Ocean. So it's the only country where ships need not go via the Strait of Hormuz or Bab al-Mandab. And this brings with it a whole host of advantages. Secondly, if we talk about renewable energy, and again, I go back to Oman. Oman has, I think, one of the top, from my understanding, is one of the top 3 countries globally in its green credentials for the production of things like green hydrogen. Because you've got an abundance of solar, which all GCC countries have, but you also have an abundance of wind energy in specific areas of Oman. So the two, when combined, it really makes Oman a force to be reckoned with in the arena of renewable energy. AI, you mentioned. By many accounts, for example, the data centers we've got currently has globally speaking, around 50 gigawatts of data center storage capacity globally, 50, right? And by some accounts, to meet current demands, we would need at least 200 gigawatts, 200 and more. And so what we're trying to say is, and to invest, I mean, the amount you would need to invest on 1 gigawatt of data center storage capacity is between 40 to 50 billion US dollars. So you can't have enough data centers, actually. The world needs data centers. The more, the merrier. And so it's not a question of competing. It's in fact, the UAE is doing great in this. Very recently, they've announced a number of huge projects in whether it's AI, the AI training center or data centers. Saudi Arabia announced this very recently during President Trump's visit, a huge initiative as well in the data center space. Oman has got a number of data. Qatar was doing. So this region specifically, given the comparative advantages that we've got, whether it's the financial capability, capital, talent, land, renewable energy, this region is going to be one of the superpowers of the data center economy.
Thank you, Faisal. Ali, let me turn back to you. You mentioned Bahrain. And Bahrain current debt to GDP is over 130%. If you look at the IMF projections, they see that going to 160% by 2030. That's the 3rd most indebted government in the world after Japan, which is a safe haven, and Singapore, which has a lot of assets. Are you worried about Bahrain? Are investors that you talk to worried about Bahrain? Or do they expect another sort of support package from its neighbors in the Gulf?
Yeah, it seems to me that obviously Bahrain's debt metrics is the ultimate story of disconnect between market pricing and fundamentals. And that talks a lot about the region, the fact that investors don't look fundamentally at one country irrespective of who is it integrated with, who is it geopolitically aligned with whom geoeconomic interest lies. And I think the only explanation for why market spreads are so tight in Bahrain is because, and I think the Minister of Finance of Bahrain said it very clearly, we are a small economy integrated with the two largest economies in the Middle East, both the UAE and Saudi Arabia. And that in itself anchors spread. Now, on the fundamentals, of course, the path that Bahrain has gone in terms of fiscal consolidation from 2018 to onwards has unfortunately been reversed, but also partly because of the COVID, right? And I think now, I hope that we are on the cusp of another fiscal consolidation era. At least that's what the authorities are saying, with a new financial stability and sustainability plan that will require, in my view, some form of debt workout with at least those key countries in the Gulf that have put their money where it geopolitically matters for them. But I think another package of support plus continued reform is what is necessary for Bahrain to turn that cusp of debt sustainability concerns.
Debt workout. Let's talk about another country that needs debt workout, Lebanon. Lebanon defaulted in 2020. It hasn't restructured yet. It's still in the state of default. Sri Lanka defaulted in 2022. It negotiated with its lenders. It got a restructuring, and it's got a rating upgrade. Tell us what steps, 1, 2, 3, that Lebanon needs to take in order to. We heard yesterday about Lebanon needs to be the Paris of the Middle East. How can Lebanon be the Sri Lanka of the debt market?
I think for Lebanon to be the Sri Lanka of the debt market, it needs first leadership and sustained effort at state building, because the fundamental problem of many countries that actually went to that, but in Lebanon in particular, is a governance problem, right? When the state is not in control of its arms, when corruption is state capture by powerful business elites is extremely strong. It is only normal that you get to see, and you live in a very geopolitically challenged neighborhood, this is a combination of things. So what it needs is first leadership to put state building back on track through governance reforms. We have a new president, a new government. That's what they are trying to do. You need restructuring, deep restructuring, both of the financial sector, because where you have $75 billion at least of losses, a central bank with negative equity, so you need to restructure that and restructure the debt. It's the only story in the markets now where hedge fund managers are interested in. I'm actually going with a large group of investors to Lebanon soon to listen to how the government is planning to do it. But I think also you need a ownership, right? We have seen plans of restructuring falter whenever the support is not there. And the stakeholders both are domestic but also external. And I think we heard yesterday from Mrs. Ortegos saying that, and also from Gulf officials, that there is a willingness to support, but you need to get the first two in line, i.e. governance back on track and state building, but also the reforms and restructuring.
And yes or no answer, do you think that would happen before the elections next year?
I think this is the biggest challenge, and this is why I spoke about leadership. If you want to anchor Lebanon into an IMF program before the next election, you need to forge ahead, and particularly on the depositors' loss issue and the loss distribution.
No?
And I think yes. I think yes.
Oh, okay. Good optimism on Lebanon. Now, let's turn to Egypt, Dr. Mahmoud, one of the wise men of the region, one of the wise men of Egypt. Egypt has been on an IMF program almost continuous since 2016. The program is going to end sometime next year.
November 26.
November 26. And Egypt has been hooked on these IMF loans, gets loans to pay back, to repay old loans. What can Egypt, do you think Egypt would graduate eventually from the IMF, and what can it do to do this?
It can and it should.
Okay, will it?
Yeah, well, there is a short answer and there is a shorter answer. I'll give you the short answer here. This is the political economy of crisis management.
Thank you very much. I'll
Not
need
a
a signature
propaganda.
after this.
The book is doing well, but all right. So, but actually, it has a section on what to do after the fund, and there is life after the IMF, a better life, because it will emphasize growth and development. It will really identify areas of work. We already spoke about the 5 Ds, but and I think the issue of having the IMF dominating your work, being between a first review, the second review, now the countries doing the 5th review, 3 to go. I think this is not really the best way to handle the economy, unless you are happy living in an intensive care. This is the kind of life with an IMF program. It doesn't really give you the flexibility to go beyond what you agree on with the IMF. It's good because it gives you some predictability in the macroeconomic framework, but you need more than just the first order condition of macro stability. You need really pro-growth policies. You need to invest in human capital better than what we do to benefit from the demographic dividend, which I don't think that countries in the region, with few exceptions, did a good job at. Many countries in the region, including Egypt, see people as population with burden, not to see them with the creativity, with the opportunities, not to see them, despite all of the hurdles that we see, that Egypt in the world of AI and digital transformation produces engineers more than the rest of the Arab countries, 3 times in any year with qualified engineers. Many of them do not end up necessarily continuing in their discipline or even staying at home. This is the kind of challenge that you need really to take matters related to investment in human capital, in addition to investment in digitalization and infrastructure, investment in the resilience against shocks, not just the climate ones, but as we have seen, the country has been subject to shocks since 2008 with the financial crisis, then with the series that we all know. So I think here, if any country has a potential when it comes to diversification, it's Egypt, more than any country in the Arab world because of the natural endowment. Agriculture, manufacturing, deep market when it comes to population. So all of that is there. So it's a country with a potential. Are we exploiting the potential or not? This is all about a post-IMF program that shouldn't compromise on the macro framework, because you cannot do business if the exchange rate is overshooting from time to time and getting under forced devaluation. You cannot do well if your growth is sluggish. And actually, in dealing with how to finance the development, it's the growth model, not the debt management or restructuring. If we do the magic in debt restructuring and debt reprofiling, which I don't think that we need now, it's basically a kind of a continuation of debt management under the rules that we have. But basically, if we are continuing to be state-led in the economic development, the very nature of government leadership is only get the best piece of land and get cheap credit and then pay the price later. But if you go into partnerships with the private sector, that will really solve the problem in a better way than we do it. So I bet on diversification. I bet on the success of Egypt in finishing this program with success. But actually, within the coming weeks, I'm expecting from the current government to tell us what we should really be expecting after November 2026. Not just in kind of nice numbers and vision, because we have Vision 2030, but basically who is going to do what kind of institution reforms, what kind of structural reforms, and deal actually with the myopia that we have been suffering from when it comes to dealing with gaps. Egypt doesn't have an import crisis, but it has an export crisis. Egypt doesn't have a spending crisis, but it has a revenue crisis because of the state-led approach. And definitely doesn't have a challenge when it comes to investment, because there are many opportunities, but actually the problem is to do more with domestic resource mobilization, including savings. If we put the priorities right, get the act of government with the private sector together right, I think Egypt could really be the brightest spot in this region, despite all of what we have seen around, because of the fundamentals and the demographics that we need to deal with better.
Let me ask one final question, Dr. Mahmoud. Because the reason why Egypt goes to the IMF, it gets recurrent currency crisis.
Yes.
It had one, a very painful one, 2022 to 2024. Yeah. There was one in 2016. There was one in 2003. The period in which you didn't have your Minister of Investments between 2004 and 2010.
We survived that one. Yeah.
So it's a recurrent thing which has been happening for decades. What are the 1, 2, 3 things, or what are the causes actually of this before thinking about how to address them? Egyptian policymakers, I'm sure they talk to you. If they tell you, Dr. Mahmoud, what are the 3 things that make Egypt go into these recurrent currency crises and then go to the IMF, what would you have in your list?
One we already mentioned, the growth model for sustainable development needs to be completely different than what we are doing. We're leveling the playing field and get the private sector to do the magic.
Level playing field means some institutions need to step out.
Or actually pay their dues, pay their taxes, don't have any kind of privileges, being subject to the law of the land when it comes to competition policy and the rest of the laws to regulate markets. But the second one is inflation targeting framework. It's good that they realized the beauty, the IMF and the authorities of the government central bank during the last couple of years, but it's important to embark on implementing it. We have been tinkering with this idea since I had this visit to the IMF and Brazil in 2002, and we got this inflation targeting framework when Brazil did it within 10 months, benefiting from the Bank of England experience. Inflation targeting tells you that the inflation should be the anchor and the exchange rate should be flexible, and that gives you the right signals. And the third thing is basically about how to mobilize finance better by localization. The smallest governorate in Egypt is in the size of a mid-sized country in the neighborhood. So localization, this is the third tip, that we need really to unleash the potential of localization of development and growth. And then if we go into these dynamics, regardless what would happen in the rest of the region, assuming, which is a good assumption, that security will be maintained in the country, because we suffered a lot because of the challenges of security between 2011 and 2013, I think Egypt has no excuse not to be the brightest spot in Africa, in the Middle East, and the Arab world.
Dr. Mahmoud Mohieldin, Alia Moubayed, Faisal Al-Nabhani, thank you so much for your time.